So thank you all for coming today and engaging in this the conversation we're going to have. I'm going to start off by showing you. I'm going to take you on a journey through the impact business movement. But before we get started, I do think it's very important to do a land acknowledgement. So we are on the, we're grateful to be on the unceded territories of the Musqueam, Squamish, and Tsleil-Waututh nations. And so I think it's just really important in the spirit of impact that we do a land acknowledgement. And our agenda today is pretty simple. We're going to talk about the impact business movement, the convergence of factors that we're experiencing right now, tools that we employ at Decade for impact measurement and design, and then action. And so I think it's really important when we first begin to work on impact in our companies or portfolios, I think it's really important that we integrate this concept of perfect is the enemy of good. We're not focused on perfection at Decade. We're really interested in moving the needle and using business to leave the world better than you found it in one way or another. And the business movement and the environmental movement, business and the environment have been at odds forever, it seems. But now we're in this convergence space where we're starting to move towards regenerative businesses. So the easiest way to put that is to think that every dollar you make can leave something better than you found it. And I think that's like the right place for us to start. And so do good, get rich, fill your boots. As long as you're leaving something better than you found it, make as much money as you want. And I actually had a thought after Frank and I had been working through all of this and sent out the invitation that it should have been called the convergence and how the COVID crisis is aligning profitability and impact. So I want to start in 1994. So in 1994, Ray Anderson, he founded Interface Carpets. I don't know if how many people are familiar with Interface, but Ray Anderson is kind of like the granddaddy of business impact. And in 94, he read a book by Paul Hawken called The Ecology of Commerce. He said he had a spear in the chest moment and decided to change course and within 5 years, he had become the US's greenest CEO. But in 94, they launched their Mission Zero, which was their promise to eliminate any negative impact their company may have on the environment by the year 2020. So we are in 2020, they achieved that goal. And we're going to talk a little bit about their future sustainability goals, but I think it's important to start with something like Mission Zero, it seemed like it was a completely wacky thing to do at the time. And so that's 94. So 97, we have John Elkington. And John wrote a book called Cannibals with Forks, in which he coined the phrase, the triple bottom line. So I'm sure some of you are familiar with that term. It's a balancing people, planet, and profit. And so John has done a lot of work in this sphere forever. He's recently, I guess in around 2012, he launched a Volans in the UK, which is one of the world's leading sustainability consultancies. And he just released his new book called Green Swans, which I have not read yet, but I look forward to reading. In 2007, Andrew, Bart, and Jay got together and they decided they were going to start a business movement and use business as a force for good. Bart and Jay had been business partners. They had a sportswear company called And One Sports. I don't know if anybody's familiar with it. They made like trash talking basketball t-shirts. But they also grew a thriving company and they sold it for, around $300 million when they exited. When they exited, all of the good stuff in the company, the daycare, the training, a lot of worker benefits, they were stripped out of the company within about a quarter, 1 to 2 quarters. And ultimately, the company failed. And they believed that the profitability of that company had been determined by the actions they took to create impact within the company. So when in 2007, when they started thinking about launching this B Corp certification, it was really a way for entrepreneurs upon exiting a company to lock mission in, to ensure that if they sold their company, that the next owners of that company couldn't just buy it and then strip all the goodness out of it. They wanted to embed impact in the business itself. One of the early ways that this was done was Ben and Jerry's. Ben and Jerry's is owned by Unilever. They're a B Corp certified company, but they sold to Unilever in 2000. And when they sold, instead of just selling the company to Unilever, they sold all the assets and they retained the license for the name. So they said, okay, this was a kind of a crude way to do this, but we want impact in our business forever. And so simply because you own the business now doesn't mean you can stop working towards our mission of creating a better world with ice cream. So, and that structure still exists today. So the first class of B Corp certified in 2007 in the US, Patagonia was among one of those brands. King Arthur Flour was another. And the movement has been growing steadily since. Fast forward a bit, the Paris Agreement. We all know, I think everybody should be familiar with the Paris Agreement. There's some details of the agreement on the slide, but basically it's a non-binding global resolution to try to limit CO2, like carbon, greenhouse gases, and temperature rise, global temperature rise to 1.5 degrees Celsius. So this was like a real rallying point. This was a huge shift. At the time, I was working in some social finance work for wind farms, and it really helped fuel the divestment narrative for even for retail level investors. So very exciting time. Divestment was in the news. Things were happening, and then and that happened in June 1st, 2017. The U.S. pulled out of the Paris Agreement. But what happened was within a week, many companies had pledged to continue their climate work, to continue trying to move towards those goals set out by the Paris Agreement. And these were big businesses. They weren't small. So the impact business movement really kind of started to kick up. Actually, I don't want to offend anybody, but when Trump won in 2016 as a consultant, I saw this huge shift, this huge energetic shift in the landscape of impact and sustainability consulting took place. So later in 2017, Danone secured a $2 billion loan from 12 European financial institutions. And companies get loans every day. The exciting part wasn't that they got a $2 billion loan. It was that those financial institutions had agreed to tie the interest rate to their environmental, social, and governance performance as set out by their B Corp score. So the higher their B Corp score goes, the lower the cost of that capital for them. So this was the first time this had ever happened. Like J. Cohen Gilbert says, like, boom, impact alpha. Like things are getting exciting now. And now we're actually seeing this in traditional banks. This is becoming being introduced as a practice in traditional banks now, which is also pretty exciting. But what else happened with Danone specifically was they became the world's largest B Corp certified company in April 2018. So it may not seem like such a big thing, but to have a huge multinational like Danone become a B Corp was a really powerful event that took place in 2018. 2018 again, Larry Fink, the founder and CEO of Blackrock, sent his 2018 letter to investors called A Sense of Purpose, and stated every company must not only deliver financial performance, but also show how it makes a positive contribution to society. So this was kind of a shot across the bow of business as usual, because what that enabled BlackRock to do, that statement, they hold board seats in thousands of companies. And so really by saying this, he kind of activated that BlackRock network and saying, like, we're not going to let companies like dump the chemicals in the river. Like, we're not going to let companies externalize the cost of doing business. And when we think about impact business and regenerative business, the whole focus is to internalize the cost of doing business to create shared value. And so with someone like Larry Fink throwing his hat in the ring, that's a pretty exciting moment. Of course, 2018 wasn't all rainbows. In early October, the Intergovernmental Panel on Climate Change, the IPCC, released their SR 1.5 report. And these were the headlines, I think we all remember. We have 12 years to limit climate change catastrophe. So again, we saw this real push in the impact business movement and within the business generally to try to figure out how do they start to engage with the environmental movement? How do they start to measure carbon and understand the true value they're creating? Now, Unilever, in June 11th, 2019, they released a press release and a report outlining their growth, but focused on their purpose-led brands. So their sustainable living brands on June 11th were growing 69% faster than the rest of their business and delivering 75% of the company's growth. That sounds really exciting and made everybody in the impact business movement feel warm and fuzzy. But it really changes the math when we think that they only actually have, at the time they had 28 sustainable living brands in a portfolio of over 400 products. So those 28 products represented 75% of the company's growth, which is pretty exciting. They also made a huge pledge. They also started making their 2030 pledges, having the environmental impact. They want to have the impact of their products by 2030. So we see 2030 starting to become like a really rallying cry. The SR 1.5 report, the United Nations, which we'll talk about in a bit, creating a lot of momentum towards this kind of North Star of 2030. In August last year, August 19th last year, the Business Roundtable, this is Jamie Dimon of JP Morgan Chase, the Business Roundtable, they created a statement of purpose of the corporation. And basically that statement of purpose meant that corporations the market is no longer about shareholder primacy, but that other factors mattered, such as customers, employees, suppliers, communities, and shareholders. So trying to redefine how the corporation is used as a tool, not just to make money, but to deliver social and environmental value. A week later, August 25th, 2019, 33 B Corp certified companies get together and they posted this they put this in the New York Times. And, you know, that's great. All of these impact business leaders, like Allbirds, Patagonia, Happy Family, King Arthur Flour, many, many brands, basically saying like, less talk and more rock, you know, less sizzle and more steak here. And if you need a hand, call us. And what's exciting about what I'm seeing in the impact business movement right now is that I've been involved with the B Corp movement since around, I guess, officially 2013, but had been working with the certification previous to that. And now that we're here, in August, it felt like we were this prototype for the way we were going to build businesses into the future. It really felt like we were gaining so much momentum. And this ad in the New York Times got 1.6 billion impressions on social media. And then immediately B Corp was inundated. The B Lab, which is the nonprofit that oversees the certification. It's they're in Wayne, Pennsylvania. They were inundated. They had to double the size of their team. And this is in September last year. Like, we're not even getting into the real action that we're seeing now. Something really, I think, really important to note. I would feel wrong if I didn't have Greta represented in my slides, talking about impact business and the power of youth and the environmental movement. So this was kind of like how we ended the last decade. Was we have a 16-year-old climate activist leading the environmental movement. So it was really, really exciting. And I don't know if anybody here, maybe you could put in the chat if you went to one of those environmental, the strikes, if you went to the climate strike in your community. We did. We had a good time. It was pretty exciting to see over 100,000 people out in Vancouver together, not playing volleyball or paddleboarding or something. So it's very exciting. And finally, this was it. This was supposed to be the biggest story of the decade, the Australian wildfires. And in light of current events, we've lost the narrative. But in Australia, 25.5 million acres of land burned, and we lost 1 billion mammals, birds, and reptiles during the fires. So this was kind of like how we closed the last decade, or so we thought. And December 31st, 2019 was the first reported case of COVID. To date, I think I checked yesterday, it was 3.6 million people are infected that have been tested. 250,000 deaths. I think everybody, entrepreneurs and investors and just the general public, we're all trying to catch our breath and get our bearings and try to understand where this is taking us as a society. And I always have to temper my discussions about opportunity in COVID, but I think, I don't think it's too soon anymore to talk about opportunity in this crisis. And so really we've come to this convergence point. So we have the climate crisis, the business movement, the impact business movement, and the nature of business changing to respond to the climate crisis, and now we have COVID. So this is really like, this is not a drill, this is all hands on deck. Every company needs to be figuring out how to create social and environmental value in support of their bottom line. And every investor, I believe, needs to figure out how to activate their capital to create returns, but also leave the world better than you found it. So we've been, like, the impact business movement has been humming, it's been humming along for a while. A lot of companies have been sticking their toes in the water of impact business. Oftentimes that's done initially through philanthropy and through benefits for workers, which is important. But that's just the beginning. That's just the tip of the iceberg. So what I think we really need to know is that what worked to get us to this point, it's just not going to work anymore. And we're faced with this amazing opportunity to absolutely rebuild the economic system. And we're seeing governments around the world stepping up. The EU just announced their Green Recovery Alliance. And this gentleman on the slide, his name is Pascal Canfin. And what's kind of interesting about Pascal is that he's a centrist. Like, he's not an activist. He's not a climate activist. He's a centrist MEP in France. And so with the Green Recovery Alliance, it's not just a bunch of members of parliament. It's also 37 CEOs, 28 business associations, the European Trade Union, NGOs, think tanks, We have the likes of IKEA, H&M, Unilever, Danone. We're seeing some of those same names. Like, it's this community of big companies that are really starting to push this. And when we think about the Green New Deal, I think the Green New Deal has been politicized. And we should stop thinking about it as a political thing and start thinking about it as an economic engine. And in the EU Green New Deal, here's some of the details or some of the goals. So have a zero pollution, preserve and restoring ecosystems and biodiversity, farm to table, like farm to fork movements, accelerating the shift to sustainable and smart mobility. All of these have ramifications for businesses and investors. And we're back to Larry. So Larry published another letter this year to his shareholders and all his stakeholders. And this is what he has to say. Companies and investors with a strong sense of purpose and a long-term approach will be better able to navigate the crisis and its aftermath. And customers agree. So Angus Reid this is from a poll conducted on April 15th, 2020. 86% of consumers are going to change the way they shop based on the way that companies handled themselves during the COVID-19 pandemic. So everybody's kind of on board here. And to me, there's like a real bottleneck of consumer need and desire, and even governments at this point responding to COVID. There's like a whole lot of money moving. And so how do we activate that capital? How do we activate consumers and capital? So here we have some stats from a recent Global Impact Investment Network, Investing Network, a GIN report. So they, and this is from 2019, they estimate the size of the global impact investing market to be 502 billion. There are other parties that estimate that to be well over $1 trillion. In this particular report, there were 1,300 respondents, and in 2018 and 2019, there were 28,000 impact investment deals made. And 1 in 3 that invested did so because of a strong financial return. So, and something else that was really interesting that exists in that report is that 86% of respondents also said that the most promising thing in the impact investment movement is the sophistication of measurement frameworks. So we need to be able to prove those social and environmental outcomes along with those profitability outcomes. And so now we're getting to this place where it's far easier for us to actually measure those outcomes. So in this convergence where we have business and citizens and government and investors all trying to figure out how we're going to leave it better than we found it, and how we're going to move through this crisis and come out on the other way and emerge in a way that is okay, put it that way. We need these big, hairy, audacious goals. And so we share this with all of our clients and our community, the elements of a big, hairy, audacious goal. It's clear and compelling. It acts as a unifying force. It's a catalyst that ignites stakeholders. And there's a beginning and an end. And Elon, who has a very solid impact business model in Tesla, he's a great example of the BHAG entrepreneur, because Mars. It's if you in your business, or you in your portfolio as your business thesis or your investment thesis, if you're thinking about what you can achieve, he's a great guy to look at, because Mars is all you need to say and everybody understands. But there's some really other exciting BHAGs that are coming into the market. So one, for example, is interface. So we talked about Ray Anderson and Mission Zero and his big goal to reduce any negative impact of interface by 2020. They achieved that goal. And their next goal is climate take back. So not only are they working with no negative impact on the planet and communities, they're actually trying to be regenerative. So this whole idea of love carbon, they're going to make their products out of carbon, sequestered carbon. Like, they're taking regenerative so far. They're my favorite example of an impact business. And their stock has been faring very well during COVID. I've been checking on it. So this to me is a really exciting BHAG, climate take back. Another BHAG that was just announced, I think in the last week, was IKEA. Their 2030 is they're going to be completely circular by 2030, which is exciting. And this is kind of in addition to some groundwork they laid in 2019, where they invested 229. They pledged to invest 229 million euros in their supply chain and in carbon reductions. So 100 million of that is for IKEA's operations, their direct operations, and the other 120 million euros is in their supply chain. So just like we see in the Paris Agreement, where affluent countries are asked to create this pool of capital to help leapfrog other companies so that we can meet this 1.5 degree cap, we're seeing the same thing with large corporations. It makes good business sense for them to invest in their supply chain. So that's a pretty exciting example. My favorite, and this could be the greatest ad ever made, Lego. So we think of Lego as a toy company. Lego is so much more than a toy company. It is a regenerative toy company. It is an energy company. It is a think tank. They're doing so many things that are world saving. But one thing Lego did in 2015 was they made their 2030 commitment to be completely petroleum free by 2030. And they've already started rolling out the results. They have their plants from plants. So all of the plants in their Lego kits are now plant-based plastic, which I think is delightful and totally on brand.